guys, how we doing? Hope you're all having a lovely weekend. Just wanted to hop on quickly and cover something that I've been asked a few times in some of the one-to-one coaching calls that I've done. This is a great example just to highlight how I'd go about it, and also I see a lot of people in the community potentially getting caught out on the 1 minute and not sort of understanding the reasons why and taking unnecessary losses. Obviously losses are part of it, you know, they happen, and you know, that's just part of the game. You can't pick what sequence the wins and losses come. What we do know is with our edge, we are going to be, you know, consistently profitable over a period of a week, a month, and ultimately at the end of the year. So don't focus too much on losses. They happen. You know, if you focus on things too much, you end up attracting them, which we don't want. So, you know, focus on being a winner. Essentially, that's what we all are. We're winners. And I just wanted to go over this though, because essentially you don't want to be taking losses that are avoidable if you understand the reasons why they're avoidable. It's a great example on GU, you know, how you can avoid taking potentially a lot of losses that you don't need to take. So obviously we know that recently GU, we're in a big uptrend, 4 hour daily, you know, we're bullish, right? And it's not essentially taking you through a whole trade. It is, but it's not. It's more showing you how to filter out things. So we get this massive impulse to the upside. We break structure here of this leg here. We push up to the upside. So essentially this is my area I'm looking for longs and expecting higher highs if price reacts and gives us what we want. So straight away, essentially we've tapped in, and those of you that might trade the 1 minute, I do trade the 1 minute. I'm not saying anything wrong with the 1 minute or against it. I just wanted to give a little bit of clarity on how you can sort of filter out what is and isn't good. So here you go. So we tap into this 1 hour order block, and most people would agree that we've broken this structure to the downside here. This is our high and this is our low at the moment. So when we break this, essentially we might be looking to take this long. So price breaks this, and instantly you're probably thinking, right, well, this broke structure, this is golden, I'm liking this, but we do have some imbalance below, so maybe we've got this here. So what you might do now is go, right, actually I want to see one more break, so I might class this as the next level of structure. This is structure on the 1 minute, right? But it's not major structure. The major structure would be up here. This is more the swing point. So what happens, we get the break of structure here, and you may even start to look and think, oh, maybe this is an area because this caused that break of structure. So then what you'd be doing is, let's say you had an order here or an order here. So just quickly, if you go out to the 5 minute, you can see how this isn't relevant structure on the 5 minute, right? This is one push, and this is just a minor pullback right now. We haven't broken this high, which is also the 1 minute swing. So this is how you can stay out of this straight away. If this comes back here and goes, fine, whatever. There'll be more trades, and that's not part of the plan for me. I'm a lot more conservative, and I like to see those 5 minute breaks from doing a lot more case studies and things. The ones that are really solid tend to break, you know, some form of 5 minute structure and show you that real intent that price is looking to move to the upside or downside depending on what you're doing. So just want to show you how, you know, price doesn't really care about these areas. So we come down, let's say you had an order here, might have been tagged in, might have got a little reaction. Then you got, say you didn't have that one on, you had this one on here. You've been tagged in now, a little bit of reaction depending on your stop. Probably not going break even because you haven't even broken any structure. And, you know, price just blows through. And if you did have this one on as well, then potentially you might have taken 3 L's here, 2 L's here, or even 1 L, right? It's fine, 1 L happens. So now you might be thinking, right, that one's, you know, that one didn't work, whatever. I'm going for this one. So if we break this level now, because now this is our new low, this is our high, I'm interested in getting involved again. So we let price do its thing, comes up to here, we get that break, right? So we break this level here. So now you might be looking at, right, well, what area do I like? Well, this essentially here might be a good area. This is potentially what caused that upside push, and we broke this level of structure. So maybe that is an area of relevance. And you also have, obviously, this area here, which we've broken. And you also have that, right? And potentially you might say you have this. So now you've got, again, a couple more areas, and you're not sure, what one do I put it on? Where do I put my order? And essentially you could be looking at taking, you know, another L. You're not sure. If you go on the 5 quickly, you can see how this now is one leg, right? This isn't structure on the 5 minute. Let me just clear this up a little bit for you. This is simply all substructure within the 5 minute, and it's not giving us that real intent yet. Price is not, you know, it's not ready to move. And again, it could move from here, right? But this is just something I'm implementing a lot, and it seems to help a lot of people. So I thought I'd do a video. So we've got this area. You can see on the 5 minute, nothing really makes sense. This one looks better on the 5 minute, but it didn't break this structural high. So this is essentially nothing. But let's say you put orders on it. Price comes down here. You get a little reaction off that one. False hope. Completely disrespects that because essentially nothing's there. And then you've left with this last one. And if you have, even if you split risk, between these here, you potentially could have taken 6 trades and all 6 have gone wrong. Now, of course, that's going to start messing with psychology, and it's going to start making you think that what you're doing doesn't work or your edge, you know, doesn't play out. And that's not the case. It's just that you're too stuck on the 1 minute and the lower time frame, and you're not actually reading price action in the sense of, well, it's still trending to the downside. We haven't shown any intent, so I'm going to wait. So now we've obviously broken this low here, which now confirms this is our high and this is our low on the 5 minute. So what you want to see is if price can break this, then I'd be interested in taking this long now, because for me it's done what it's had to do, and now this could be the real intent. So we get a push away from here and we do leave some imbalance. I know a lot of people focus on imbalance, and you know, imbalance is great, but don't just have your focus solely on this bottom area and that imbalance. Look at what break structure and what price is doing. So as you can see here, we get this real aggressive push to the upside, which comes from this candle here, which is a 5 minute candle. So order block, POI, whatever you want to call it. But you might be sitting there thinking, well, what about this one? Like, this one looks quite nice still, but this never actually broke structure. Remember, this is our structure. This never broke it. You drop to the 1 minute quickly, and you can see that this candle here still didn't really break 1 minute structure, because even if you class that as the 1 minute high, we just got a wick. And what we did is we came down, we dropped some liquidity here, and this candle swept that liquidity and mitigated this, which then caused the upside break and broke 5 minute structure. So for me now, this is giving me all the confluences that price is likely to come up and continue to push up, and I'm now happy to look at getting involved in the market. So this is where I would use the 5 minute and the 1 minute and essentially the 3 minute as well, to just see what's cleanest and what I want to set my order on. I also have the 2, the 4. I like to see, you know, on price what's the cleanest and what's showing me the best entry. So again, on the 2 minute, you can see a similar thing where we've broken, you know, we've come up here, failed to break, we've pulled back, we've swept liquidity, we've had a mitigation of this wick, and we've broken structure. You go on the 3 minute, you can see the same sort of scenario. We know we've had liquidity build up. This is what broke structure. It's also a sponsored candle, which lines up with the 1 minute sponsored candle. So I'm quite happy that this is the area that's going to be mitigated before pushing off to the upside. So what you do, and again, it's completely down to how you do this. Essentially with a sponsored candle, the 50% will always get hit. So because this is, let me just draw it out so it's a little bit neater. So we've had equal lows here, which we've swept. We've had a mitigation of something in this wick, which is like the 50% of the wick. We've then had 5 minute breaker structure here. And we've also broken this structural high here as well, which on the 5 minute, you know, we've pretty much wicked above, but we've had this solid break because remember, we broke this low, which made this now our high. And on the 5 minute, you can see, you probably wouldn't see that liquidity that was dropped. You'd see the mitigation, but you wouldn't be aware, which is where now you can go down and you can check, you know, what happened. You could also just take the 50% of this candle and just solely use the 5 minute. There's literally nothing wrong with that. Or you could refine it to the 3 minute if you wasn't sure, and you could put it on the 3 minute. But for me here, I'd take this on the 1 just because of how clean this setup is. So I'd set my order here. And if this is valid, price shouldn't go below this level, right? I'll give it a little bit of buffer with GU, but essentially, you know, I don't go lower than 2 pips. So I'll give this 2 pips. And you're probably thinking, what about that? That's got no relevance at all. There's nothing there. If price comes to this, we're coming lower. You know, it might have a little bit of imbalance, but this didn't cause any break of structure. This caused the break of structure after sweeping liquidity and mitigating. So this is like A+ setup for me. And remember, we've now avoided potentially all of these. But if you had taken all of those losses, you have to ask yourself, would you now be looking to take this long? Probably not. Or you might be sitting looking at this one. So it's just showing you how if you use the time frames in confluence with one another, you can avoid these losses here because we never broke major structure. And then when we do break structure, you can look to get involved on the 5 or on the 3 or on the 1, however you want to trade it. So on the 1 minute here, price builds a little bit of liquidity. You know, we have liquidity here, which is looking quite nice to target. We did mitigate some imbalance here. We just missed this POI here, but we can see that we've got, you know, bundles of liquidity. We've got trend line liquidity, and obviously we are trending to the upside, and we know that we're likely to put in higher highs. So price comes down, and again, it comes down quite aggressive. And this is another thing, you know, you don't have to freak out if price comes down like this. Essentially, it's pulling back to collect its orders to continue its push in the right direction. If, of course, the trade is right. See how we never close below the 50%? We just wick it. And now, you know, now you're in this trade. And again, you don't have to trade off this. If you're unsure of this area, you can trade the reaction, which I'll just quickly go through because it's a great example of sort of double confirmation entry. So price now comes down here and we get another mitigation, but we haven't broken structure because our highs are, at least we're looking up here, and of course on the 5 minute, you know, these are our highs. But now what we can see is now we've pulled back here. This is potentially our high, which we're looking to break. Of course, this is more aggressive because this is a double confirmation, but we've had that confidence that we've stopped dead here, and now can we break structure and see if we can get involved. Obviously, you might miss trades doing this, but you've broken this level and you have this doji here, which caused that push to the upside. So what you can do is you can mark that out, and I would take the whole candle here because sometimes these doji candles don't come to the 50%, but I would cover these wicks just in case. I wouldn't worry about this now because essentially this is protected because price never closed below it. And you could look to take this if you hadn't taken the first one, and you would get tagged in. Price mucks about a little bit. Obviously you're not going to break even yet because we haven't broken this high, and obviously I don't go break even, I just take partials. And then all of a sudden price, you know, does exactly what we think it's going to do, and it completely explodes to the upside, and it continues to explode to the upside, and you would make a lot of nice R. And all of a sudden those, you know, worrying about losses is just non-existent because we've just gone and done, if you took this one, you know, that's running at 17%, and if you took this one, that's running at just shy of, it peaked at just shy of 40. And obviously, you know, really we're looking for these levels. This most likely will probably get taken out, and we'll look to see if we can push up higher. Obviously expecting pullbacks as we're now sweeping liquidity, but as you can see, we pushed up higher. Oh, and you know, that now peaks at 53%, and this one peaks at 23%. So it was just, I just wanted to hop on and just show you how the 1 minute, sometimes it's great, and I do use it a lot, especially for refinements. But just understand that the breaks of structure on 1 minute sometimes can be very noisy, and they can entice you to take trades that realistically aren't valid and are going to cause you a headache, because if you took all of this noise here, you may well have missed out on these, and once they go, your psychology, you're going to start going, oh my god, why didn't I take that? And all that was based off is, you know, simply waiting for that 5 minute boss. Once we got the 5 minute boss, you then dig in, you investigate, and you look at what caused the boss, what's happening, and what can I look to set my order on. And of course, if you're not sure, then play the confirmation entry like this, and you get involved. Sometimes you might miss them like this, and sometimes waiting for a 5 minute, you might miss it. It might tap in and go. But I'm fine with that because I know that over a period of a month, on 3 or 4 pairs, I'm going to get more than enough and finish the month consistent and in profit. So yeah, I'm not going to carry on rambling on. I know it's quite a short video, but I just thought it's a question I get asked a lot, and it's something that I'm seeing more and more people struggling with. So I just wanted to try and break down how you can use multiple time frames in confluence to avoid taking L's, and also give you more of an insight that we are potentially showing intent and when to and when not to be in the market. So I hope you all have a lovely weekend, and I'll catch you all soon. Take it easy. Peace out.